Fundamentally, the larger the cryptocurrencies, market cap wise, the way more money that needs to be added into it for it to even double. Like for Bitcoin to double, we have to see nearly $2 trillion more dollars enter the market. Or if we look at something like Aerodrome, this has 1.1 billion in market cap, in which case, if this hits 5 billion, 10 billion, that's a 5 to 10x even from the prices here, in which case it takes a lot less total capital in order to get these large returns. Where if you get a 10x on Bitcoin, you literally need $18 trillion to enter the market. So understanding the relative size of market caps is going to allow you to build out portfolios. And the smaller the market cap, usually the more risk, but the more upside. The larger the market cap, the lower the risk, but the lower the upside. Okay, and so you can build out portfolios this way. And I'm going to show you in a second how to build out portfolios. All right, but let's step into the world of technical analysis for a second. And let's see, for technical sake, how we can start evaluating the market. So there's a few key things that I want you to take away. Okay, the first are going to be trend lines, right? So anytime we're seeing the price bounce off an invisible level or seemingly invisible level, this is going to fall back into our trend analysis, but we can see there are all sorts of different trends going on in the market. All right, you'll see, so this was following an uptrend. You'll see bounce point here, bounce point here, bounce point here. This is following a downtrend, bounce point here, bounce point here, bounce point here. Now, when something like this happens, the price basically has to decide whether the sell pressure to the downside is going to beat the buy pressure to the upside. But typically, once something breaks out of these upper trends and retests the overside right here, that's the last point before